All right, so let's talk about some short premium kickers, some short premium boosters here this morning. Everybody could use a good little booster to their short premium trade. So, John, hit us here on the intro slide this morning. The Grand Poobah, gentlemen, as premium sellers collecting positive theta on our short positions is the thing that we bank on over time. But in addition to the passage of time, there are two reliable market phenomena that can serve as boosters to our performance: volatility contraction and positive drift. And one strategy that we lean on heavily in our portfolios is equipped to benefit from all of this: short puts. So I think we can all agree that the thing that we are banking on day to day is positive theta. It is the time decay on our short premium positions. But it's pretty hard to argue with the fact that, you also have two pretty reliable market metrics or market phenomena that you can also tap into with certain strategies like a short put, volatility contraction, and positive drift. I mean, I think volatility contraction, you can make a case that that's more of what we're trading than positive theta. I don't know. What do you guys think? I would probably put positive theta number one, volatility contraction number two, but I think you could easily, you could make a case that volatility contraction is number one. What do you guys think?
I'm going, volatility contraction. Easy.
More than positive theta.
Well, what's the difference? You talking about positive drift?
No. I'm not talking about positive drift yet. I'm just talking about positive theta is I'm positing this morning that positive theta is the most reliable thing that we trade. The time decay, the passage of time, etc. I am also saying, though, that volatility contraction, it's in the running. It's in the conversation. Right? I'm asking you all if you disagree or differ from me in terms of what ranks the highest in your mind when you're putting on a short premium position.
Well, I was looking at positive drift when you said that, so that's why I answered it.
Yeah.
But sure, I'll go positive theta then volatility contraction. Positive drift doesn't mean anything to me.
Okay, it actually means more to you than you might realize. Not unlike the Swifties themselves. Where are you at? Where are you at on
Saz has a hot hand. I'm going with him.
There you go. All right, let's do it. Okay, so John, hit us here on the next slide. All right, so let's show Tom why he loves the short put so much. This is the strategy that taps into all of these things. So number one, with a short put, you have positive theta, obviously, because as a short premium strategy, the short put is always positive theta. There will never be a situation where it is not positive theta. Number two, you're also negative vega, right? So obviously you're going to be able to tap into any volatility contraction that might be, taking place in the marketplace. So all short premium strategies are also negative vega, so they benefit from volatility contraction. Now, short premium strategies here, I'm referring to undefined risk short premium strategies. When you get into defined risk, the vega can flip around. Sometimes you're negative, sometimes you're positive. So that's kind of a separate thing. But then lastly, your positive delta, right? The short put is a bullish strategy. So it benefits from any positive drift in the market over time. Tom, you are a perma bear. Tom, you trade from the Tim Knight School of Trading. Still, you love short puts. You know you do. Don't fight it. Correct?
I love short puts. Yeah, I'm always short puts.
Exactly. How can you not?
Yeah. No. I live a very clean life of being short a lot of puts.
It's clean, it's simple, it's wholesome.
It is.
Right? This is why you gravitate to the Swifties.
Yeah. No, it's very wholesome.
Yeah, I mean, exactly. And so when you think about these three, the beautiful thing about these three things, though, positive theta, negative vega, positive drift, with a short put specifically, is in the event that the market does rally, which obviously it's been doing a lot of, the last couple of years, the last decade or so, the short put is so well equipped to pay you off very, very quickly in the event that the market does rally, because when the market rallies, you essentially have all three of these things working together in unison, in a collective sense, that are all working together on the same side of the fence. You have the positive theta that's always working for you, the passage of time, but then you also have volatility contraction that's probably coming along with the market going higher, which hasn't happened as much lately, though. I mean, volatility has kind of stayed bid lately, which is kind of interesting. But then also you have the positive delta, of course. And so when you have these three things working for you, it can lead to some really quick paydays. Now, it's been said before that for every gimme, there's a gotcha. And so the other side to this is if it goes against you, then it can start to hurt. Then you can start to feel some pain. Not unlike your twisted knee there, Tom.
My twisted knee has been fixed.
Oh, yeah? How'd you fix it?
Just a lot of really hard work and diligent exercising and stuff like that.
That's it.
Like,
that's right.
yeah.
I mean, how do you think Mahomes was able to do what he did last night? Right? It's all the training, right? It's all the hard work he put in. It's all the powers that be making sure that he would win. I mean, it's all these things together, you know?
Probably some of it, for sure.
There you go. All right, beautiful. Well, the point I want to make this morning is
his
not
wife
only what
is
we have
in
here.
Sports Illustrated.
Yeah, the cover, I think.
Is a cover? I don't know.
I think so. I don't know. I haven't seen it. But she's in Sports Illustrated for sure, yes.
Yeah,
Yes.
I saw that.
You saw that?
Sorry.
No,
Sorry,
please.
back to short puts. We're just transitioning here. We're just going back and
No,
forth.
I mean this is what makes the Tasty Network unlike any other network that's out there. And
But I thought
so,
that
you know, we
Sports
have the
Illustrated
short
was out of
put.
business. Like, that's what I'm saying. Like, you know.
I kind of did. I honestly did too. I thought they were gone.
I thought they fired everybody and they were just, but they do the swimsuit model? I mean, the swimsuit edition?
I don't know.
All right.
Yeah. Well, anyway, so the short put is the first point that I wanted to make here this morning. But here's what's interesting. So, you know, the short put is a great strategy as a standalone strategy, obviously. But it actually shows up. It's kind of ubiquitous in our portfolios. It shows up in all these different strategies, and you're essentially able to tap into these benefits, these short premium boosters, these short premium kickers that we see right here. So, John, go ahead and hit us here on the next slide. So, what are some other short put strategies? Well, here's just a few that we use all the time. So, number one, short strangles. Right, a short strangle is a short put and a short call. I mean, we talked about this just recently, gentlemen. I mean, Tom, you were saying the short strangle is probably your favorite strategy. I mean, Bat, I would say yours is also probably a short strangle.
Yeah, for sure.
Yeah. I mean, selling both sides, it's your classic, right? It's your Betty Crocker play. I mean, why would you not, gravitate to a short strangle? But this has a short put in it, right? And obviously you got the short call. It's neutral. It's a little bit different, of course. But there's some key benefits to the short put that you're able to tap into. You have put ratio spreads, which we talked about just recently on this very show. You know, you got a 1x2, you got a 2x5, whatever it might be, 2x3, 3x5, whatever. You're tapping into those short puts. You got some Jade Lizards for all my Liz and Jenny fans out there. You've got a short put and a short call spread. And then lastly, the short put spread, it's a little bit different because it is defined risk. And so it's kind of a different discussion, but you still are able to tap into at least some of the benefits of the short put. And so when you look at this list, Tom, I'm going to say, looking just at this list. So Tom, Tony, look at this list. Short puts plus all the strategies you see on this slide. I'm gonna say, sight unseen, Tom, this is 85% of your portfolio.
You're going to have to come to the Where's Bat in the first Where's Bat live session in Houston. We are actually doing, well, you should know because you're going to be there, but we're actually doing everybody's favorite strategies one by one. And I'm not going to tell you because we're going to surprise each other. So I'm not going to tell you what I'm doing as my favorite strategy, although I might say that a variation of what I'm doing may be on this list.
Okay. All right. Fair enough.
So if you have a
Tony,
chance,
You're 100% correct,
if you have
Jim.
a chance to get out to Houston,
Thank
we
you.
have 6 speakers. Each speaker is giving their favorite strategy of stuff that anybody can do on the platform, real simple. And if you get the right answer, you get a clue as to where the bat may be. And if you find the bat,
You kill him.
if you find the bat, you get a prize.
kill him.
If you kill him, you get 10x the prize.
You tie him up and you leave him there.
Oh my God, I pay a lot of money for that. Sorry, Jim. Yes.
No, it's gonna be good. No, it's gonna be good. I'm excited. No, I'm super excited.
I don't think you planned it this way, but my strategies are yes, they are embedded in this list or variations of them.
Of course. No, I already knew that was going to, that was going to be the case. And so, so I just think that the short put in terms of giving us a little boost to our short premium, in terms of giving a kicker, especially for people that like to trade the market from the short side, especially for, you know, the perma bears that might be out there. It's like, man, this is just such a good, powerful strategy. It's impossible to ignore. It's impossible to ignore the benefits, you know? So, I don't know, gentlemen, get them a few takeaways. Let's give them the market measures. Man, let's do it. Let's get them a few takeaways. So positive theta and time decay are what we bank on over time as option sellers, but there are factors to our profitability that we can position ourselves to take advantage of in our portfolios, just as we do with the volatility contraction and positive drift in the short put strategy. And let me be the first to congratulate all of my Swifty fans out there, because y'all worked hard. I mean, you guys had to suffer for like 3 to 3.5 weeks.
Hold it.
That was a long wait. That was a very long wait.